been teaching to the world, and now I think that's a great opportunity that I'll be teaching you guys on the taxation matter. I think that's the only aspect wherein I can say with confidence that Taxmann would be doing better than Wikipedia on the taxation aspect. I would be happy to address all your questions at the end of the webinar or after I complete each discussion on the various aspects. Since I have got multiple issues to cover in this webinar and I have limited time slot of 45 minutes, so I didn't prepare any PPT. I'll take you through the entire content which you can. I'll also enable you so that you can find answer to all your questions. How you can do that, I'll also explain it. So we have a platform called Practice, and I'll be using the same platform to give you an overview, to explain you how these provisions work for various components of salaries, for various tax provisions you are looking for, you want me to explain. So I'll quickly just share my screen and we'll take up each matter one by one. So Praveen, just confirm me if my screen is visible. Just a minute. Yes. Please confirm if my screen is visible. Right. Thank you. So the first aspect I would be touching upon is the components of your salary. So I have got a sample payslip from Praveen. So I didn't find much components in your payslip. So what we have done, we have prepared a sample salary structure in a package of 10 lakh and 20 lakh. And it's up to you guys how you can explain to your employer if they can allow you to bring all those components in your salary. So this is a sample structure of salary of rupees 10 lakh and 20 lakh, right? So again, before coming to these points, I think I should highlight one major observation made by our late finance minister, Shri Arun Jaitley ji. So while presenting the budget speech for the Union Budget 2018, so he has shared some statistics. So he said, in India, a salary taxpayer is paying average salary of 76,000 rupees. While as in contrast, a businessman or a professional is paying an average tax of just 25,000 rupees. So now you can see that a salaried person is paying 3 times higher taxes than a businessman. So it clearly shows there is very little scope for the salaried person to plan their salary, to reduce the tax burden on their salary. Still, whatever I would be talking about, that would be within the four corners of the law. How we can plan our salary component so that we can reduce our tax component a bit, right? So this is, you can see that this column, these three columns show you the impact of your tax on your 10 lakh rupees of salary income, and the next one is on your 10-20 lakh rupees of salary income. So the first element is basic pay. So basic pay is always taxable, but basic pay is very important because there are many factors which are dependent on basic pay, like your house rent allowance, like your employer's contribution to PF, your employee's contribution to PF. In fact, subsequently, your gratuity computation, your leave salary encashment, all these components depend on your basic pay. And some employers may allow you to keep, as per your choice, you can keep 60, 70, 80 or sometimes 100% of your salary as your basic pay. So in that situation, you would lose some tax benefit in the same year. But in subsequent years, when you retire, your gratuity amount would be computed on your basic pay. So that would give you some additional benefit. So, but for our calculation purposes, we have assumed that, so in our case, so 30,000 rupees we have assumed would be your basic pay. So generally, and if I talk about the upcoming labor codes, so in fact, they have also suggested that the 50% of your total salary component should be at least your basic pay, basically plus DA. So in our calculation, we have assumed just a random number of 30,000 rupees. If your salary is 10 lakh rupees annual, and so it means 83,000 rupees, 350 rupees is your monthly salary. So out of this, we have kept 30,000 years basic income, so that is taxable. House rent allowance. So one of the questions which I have also received is how many of you are staying in a rented house? Since some have said that they're staying in a rented house. So for rented house, I'll quickly open that. Yes. So house rent allowance basically is an allowance which is given by, which is allowed by the Income Tax Act to all those employees who actually stay in a rented house. So that's the condition number one. Condition number two, you should actually pay a rent for that house. So it may be possible you and your spouse are staying in a rented house, but your spouse is paying for that rent. So in that case, you won't be eligible to claim the exemption for the HRA. But if you are paying from your own pocket, then you can claim the exemption. So some may have a query: what if I am staying with my parents and I am actually paying rent to my parents? So that could be a possible situation. So even in that case, you can claim the exemption for the HRA, but you have to make sure you timely monthly make payment of rent to your parents and by banking channels. And you also make sure that all those electricity and whatever documents you could create, it could be a rent agreement, you could mention in the society's records that you have taken this property on rent. If you are doing that, you can claim the exemption. Why I'm saying that? So there was a Bangalore tribunal judgment wherein they have disallowed the exemption because the SSA could not establish whether she was actually paying rent to her mother or not. So if you're paying, you can claim the exemption. So how much exemption you can claim? You can claim the exemption for the minimum of the following three amounts: the HRA you actually receive, the actual house rent paid minus 10% of salary. So here 10% of salary is basic salary, though it includes other element, DNS allowance and commission. But since our case, I have just kept basic salary. So actual rent paid minus 10% of your salary. And if you're staying in Delhi, Mumbai, Kolkata and Chennai. So this is a exclusive list of cities. So even if you are staying in Gurgaon, so though it comes within the definition of Delhi NCR, but for income tax purpose, for HRA exemption, you are not staying in Delhi. So your exemption would be limited to 40% of your basic salary. So you have to keep this in your mind, right? So whatever rent you are paying to your landlord, you will have to declare the PAN of your landlord to your employer. If you are paying more than 1 lakh rupees of rent to your employer, and this is very important aspect. So some people may claim the HR exemption and submit the PAN of any person. Don't do that, because in that case now what happens from the last year, the government has launched a new functionality of AIS, Annual Information Statement, on the income tax portal. If you guys have filed your return of income, you would have found a new statement of AIS. This is basically your tax passbook. Or I would say this is the new avatar of Form 26 AS. So if you are showing that I am paying rent to this XYG person, that XYG person will find the detail of all this rental income in his AIS. So if he is not declaring that rental income in his return of income, he would definitely get a notice from the department. So guys, you should just keep this in your mind. So there are few more points in HR exemption. You can simply go to this portal and access them. So this is the point number one. Our point number two is research allowance. So what is research allowance? So Income Tax Act allows certain taxpayer, salaried person, to get allowance from the employer and the claim exemption for it. So what is the purpose of this research allowance? So the research allowance is basically allowed to, and you guys, this is very relevant for you guys because you have to keep yourself updated with all those recent happenings. You have to subscribe to a lot of research platform. So if you do that, and whatever amount you pay for that, and if it's not about your CTC, if it's part of your CTC, then you can claim an exemption for it, and there is no limit for research allowance. Whatever amount you actually spend on for taking the subscription of books, any research platform, any research apparatus, you can claim the exemption for the entire amount, but you will have to submit the bill, the invoices for spending the research allowance on all these items to your employer. So we have kept 5,000 rupees as your research allowance.
Naveen,
and the next one is,
Naveen, I have a question. So this component which we see here is something which you suggest on top of the existing component we have.
Yes.
Okay. And in terms of research allowance, I just briefly wanted to understand, is there any cap on research allowance?
No, there is no cap.
Okay.
just ensure that you actually incur it and you submit an invoice of it to the employer. Because if you do not submit that, employer will not allow you any exemption for these research allowances.
Kabir, go ahead.
And similarly, we have helper allowance. So maybe you need assistance of a typist or a research assistant to do all this stuff. So if you are taking allowance to hire a helper, then you can claim an exemption for this as well. So again, we have kept 5,000 rupees toward the helper allowance. And
Kabir,
you can also...
Sorry, we have a question. Kabir, go ahead.
Hi, this is a bit of a rudimentary question. So do we specifically go to our employer in India and tell them that we're subscribing to this XYZ platforms and include these in research allowance? And the reason I asked this question is that we recently had submitted our proof of investments and reimbursement forms, and this particular provision or aspect of research allowance wasn't provided there. So how do I address this situation? Do I specifically
now you can't do that. So I started my presentation with this statement. So when I saw the pay slip, your current employer do not allow you to keep all these components in your salary. So what you have to do, you need to ask your employer to change the salary components. And if you have got that form, wherein I have simply asked, does your organization give you the flexibility to plan the salary component? Currently, no. But if your employer does that, then definitely you can claim the exemption. But for the last year, for the month which has gone, you can't claim the exemption for all those months.
So, Kabir, this is something which is very useful from a ERG perspective, from a further, discussion which we are going to have with a respective employer of record.
Understood.
Yeah, thank you. It's Naveen, continue.
So, and similarly, this helper allowance. And now coming to the next component, which is leave travel concession. And guys, you have got the complimentary access to this platform. So whatever you need, and not only for just planning your salaries or your tax computation, but for your day-to-day working as well. You can keep an eye on this platform. These are properly amended, updated, just like Wikipedia. And I definitely at the end of this webinar, I'll ask some personal questions from you. So this is leave travel allowance. So leave travel allowance is allowed to the salaried person for going on vacations. Not just the vacation, even if you are visiting your hometown, even in that case, you can claim the exemption for the leave travel allowance. So this leave travel allowance is allowed only for 2 years in a block of 4 calendar years, and the ongoing ongoing block is 2022 to 2025. Means it starts from 1st January 2022 to 31st December 2025. This is not like the financial year, this is a calendar year. So you can claim the exemption for towards LTA for 2 years out of this block of 4 years. So I'm not touching upon the previous block since you guys didn't have any component of LTA in your salary. So what exemption you can avail of for this LTA? So before that, you can claim the exemption for yourself, for your spouse, 2 children. If you guys, if anybody has got twins, and in that case, that would be counted as once if they were your firstborn child. Otherwise, only 2 children can be considered if they born on or after 1st October 1998, your dependent parents and your dependent siblings. So you can claim the exemption for all these family members towards LTA. And how much exemption you can claim? You can claim the exemption only for the travel cost, right? Not for the hotel, not for your day-to-day expenditure, not for your meal, just the travel expenditure you pay. It means if you go to Make My Trip and book air tickets, only that amount can be considered for your LTA exemptions. That's my LTA part. Then the another one is mobile bill reimbursement. So whatever mobile bill you have and you get the reimbursement from your employer, that would be entirely tax-free. And you may guys have got the question whether it would include internet, though the law is silent on this aspect. But we have been claiming the exemption for the internet bill as well, and we have got the exemption from last many years. So you can go for it. And in fact, this is really relevant, and it become crucial, especially in a current scenario wherein you guys are working from home, right? So this is, we have kept 1500 rupees towards mobile travel, leave travel 8000 rupees. So car maintenance and reimbursement. So if you use your car for accommodation from office to home and back, in that situation, whatever amount you incur would be entirely tax-free. But I know it would be really difficult for your employer to make a policy for it, because it depends on two variables: the kind of car you're using, the mileage of it, and the distance between office and your home. So in that case, you can ask your employer to make a proper policy. You can give a range of 0 to 5 kilometers, 5 to 10, 10 to 20. So in that situation, you can fix up a sum that this would be the exemption I would allow for your accommodation between house and office, and vice versa. Similarly, you can also claim the exemption of rupees 1800. I'll also show this. So if you are using your car, you can claim the exemption of 1800 rupees for small car. What is small car? It depends on the CC we have written down in this article. And for 2400 for the big car, and 900 rupees per month towards driver salary. So if you are not keeping a driver, it's not a chauffeur driven car, then though no exemption is allowed. But if you simply say that I have hired a driver to drive my car, the exemption would be allowed. But in that case, the employer will have to ask you to submit the normal vouchers of payment of salary to your driver. So you can do that simply. And I'm not saying you to manipulate your document, but you can do that.
How does it work in remote environment? Because most of us work in a remote work environment, and we don't have a physical office here. So,
so this in that situation, this exemption is not for you.
Got it.
Yeah. So I have got a few more points which generally some companies allow their employees to do. What they do, they ask the employees to give their car on lease to the employer, and one component of the salary is towards the lease charges towards the car. So in that case, this lease charge would be taxable as your business income, and you can claim the depreciation and the or fuel charges from that income. So in that situation, some amount may be reduced towards your tax bill. But again, that requires a lot of planning, a lot of documentation at the employer's end. So I'm not suggesting this as of now, but that's just a thought for you to explore. If your employer is too open to take that much of pain to give you some tax benefits. Then next is medical insurance. So if you have taken a medical insurance, or if your employer takes a medical insurance, or you have taken a medical insurance and gets the reimbursement from your employer, in that situation it would be tax free. But even if you don't do that, you can claim a deduction under section 80DD towards the medical insurance. So if you keep it or you don't keep it, it won't have much impact on your tax burden, because in 80DD so since age of as far as I just see the faces some of the employees, I don't think so your medical premium would be more than 25,000 rupees. If that is the case, you can claim the deduction under section 80D, and if it exceeds, then you can explore this route of getting the reimbursement from your employer towards the medical insurance. Then second one is meal vouchers. So meal vouchers basically, I'll also open this. So this table will explain you how you can claim the exemption towards the meal vouchers. So tea and snacks served in the office or outside is fully tax free. Non-alcoholic, just a second, Sunil. एक बार ना राकेश जी का कॉल है, पर मेरा वेबिनार चल रहा है. Non-alcoholic beverage is fully tax free. Alcoholic beverage is fully taxable. So free meal, if you are guys working in remote areas, offshore installation, then it is not taxable. But since you are working from metro cities, so this won't be relevant for you. And you guys are working from home, so above all these options won't be relevant for you. So this one is really relevant, free food vouchers. So you guys have known about the Sodexo coupons. So if your employer allows you to have a Sodexo coupon of 50 rupees per day, then it would be tax free. So that's why we have kept 1500 rupees. Then the employer's contribution to PF. So the provident fund, in provident fund, you make two contributions. One is by employer, the second one is by the employer. So your contribution is considered as application of your salary income. So you won't get any deduction while computing the salary income, but you can claim a deduction of your contribution under section 80C. But we haven't discussed here. We'll discuss it in 80C deduction, which is one of the question for today's webinar. But if your employers make contribution to PF, that would be considered as deduction from your CTC. So in that situation, it won't be taxable in your end. And the remaining amount would be towards the special allowance. So that is fully taxable. So the similar working here, so you can see that we have kept all those components at tax-free, only the last one is. So on 10 lakh rupees income, the taxable income is 4,20,000 rupees. Even if you do not claim any deduction under section 24B and 80C or 80D, so your income would be tax-free. If you all of you are resident in India, you can claim 87A relief and your tax burden on this income would be tax-free. Similarly, on salary income of 20 lakh rupees, the taxable income is 9,60,000, and if I claim a deduction of 1,50,000 under section 80C, 2 lakh under section 24 towards interest on housing loan, 25,000 rupees under, or if I also add 25,000 for your parents. So, and similarly 50,000 rupees for 80CCD. This is towards your NPS contribution. So, how much your taxable income would be? 5,10,000 rupees, right? So, if you can reduce this income by another 10,000 rupees, your tax amount would be nil. Otherwise, your tax amount would be this would be 14,500 and into, so this would be your tax amount. So on 20 lakh rupees of salary, this would be your tax amount 50,080. If you reduce your tax by, if you reduce your salary by 10,000 rupees, so tax would be nil. So since we have taken salary of 20 lakh 26,000 rupees, so if I reduce it to 20 lakh, so this amount would be, so this amount tax would be nil. So this is these all the salary components which you can plan. You can talk to your employer. If I would be sharing this sheet with you guys so that you can share it with your employer and ask your employer to allow you to keep all these components as part of your salary structure.
Maybe a quick question here. Given that the existing component and the new component which you suggested, what sort of or what percentage of tax we can save with with the inclusion of new suggestions that you have made?
So how much percentage of your salary components you can keep in your CTC? That's your question, Praveen?
No, the question here is, like I've sent you our structure, our components, salary components of existing salary components versus what you have suggested, like what kind of impact this would have on our salary. And I think Kabir has a question.
So Praveen, actually, it would be, I won't be able to justify this question if I answer it in a very standard terms. Because I'm saying that, so every person has got different, issues, different nitty-gritties. I don't know how much, if they are staying in a rented house or how much rent they are paying, because certain exemptions depend on, like the HRA one. So it depends on how much rent you are paying and which city you are staying in. Similarly, research allowance, how much your employer allows and how much you can invest on for taking the research subscription. Similarly, leave travel allowance. So everybody would have different tax working. So it won't be advisable that I answer your question here. Maybe we can work on different components. If you can share a few salary structure of your employees with proper replies on how much component, how much value of the component your employer is allowing you to keep. Only in that situation we can do a proper calculation. So this is a standard calculation which we can have. If you can replicate this entire component recommendation to your salary, then your tax amount would be the same which I have just mentioned in this document.
Got it. Kabir, you have a question, I guess.
So Naveen, I want to know one thing. Considering that now that we have filed our POIs, when we file our taxation, And at that time, we consult one of the CAs, like we all have a CA who else helps with the taxation. Can't we put these allowances, etc.,
No,
these
no, you can't do
reimbursements
that.
then?
No, you can't do that, sir. Because if it was not part of your salary during the year, you can't claim the deduction or exemption for all these allowances. But there are few things which you can claim later on, like ATC deduction.
Mm-hmm.
ATD deduction means a deduction towards your insurance policy, medical insurance, interest on housing loan. Even if you didn't declare all this information in your investment declaration filed with the employer during the year, but you can't claim the exemption for all these allowances because you don't know. And only the employer has that flexibility, that authority to keep all these allowances as part of the salary. Employees do not have that freedom to bifurcate their CTC at the time of filing of return of income.
Understood.
Yes, sir. So, but still, I have a suggestion for you, and I'll take that question. I think that would be the right time to take that question right away. Is alternative tax regime. Since you guys have not kept all these components as part of your salary, so you guys can explore the alternative tax regime.
Understood.
Right. So this alternative tax regime is it's 115 BAC. So since, and you can see that these all are exemptions which are not allowed from alternative tax regime. Oh, and one more thing, I think I forgot. I didn't allow the deduction towards the standard deduction of 50,000 rupees. So the standard deduction of 50,000 rupees is allowed to all the employees, irrespective of the amount of salary they are getting. So in this situation, 10 lakh rupees is anyways would be taxable 9,50,000 rupees, right? But in alternate tax regime, all these deductions or exemptions are not allowed. So you can see that LT is not allowed, HRA is not allowed, all these research allowance, standard deductions, nothing is allowed. So if you have not kept any of this component as part of your salary, then you can do calculation under alternative tax regime of section 115 BAC. And if you see the tax burden under this regime is lower, in that situation you can go for this rather than the normal tax regime. But you should guys do the calculation first under normal and alternative before deciding if you want to go for it or not. Because you don't get ATC deductions either, or ATD or 24B, means interest on housing loan.
Thank you, Naveen. Just a follow-up question to this. So whatever TCS is collected at the time of, say, purchase of vehicle, etc., do we have to give that to our employers, or do we need that later at the time of filing taxes?
So it's up to you. You can submit a declaration to your employer. So in that situation, so you understand how the tax is calculated and deducted from your salary income. So assuming you don't have any other income, just the salary income, in that situation, he will compute the tax on your total income after considering all your deductions and exemptions. And let's suppose the tax amount is 1,20,000 rupees annual. And you have been working with your current employer for the entire 12 months. So he will deduct 10,000 rupees per month from your tax, from your salary. So, but you say that I have paid 10,000 rupees, or for simple working, I assume I have paid 12,000 rupees by way of TCS at the time of buying a vehicle. So in that situation, he will deduct 12,000 rupees from 1,20,000 rupees, and now he will deduct 9,000 rupees every month from your salary. So even if you don't declare that at the time of filing of return of income, you would find this TCS information in your form 26AS, and you can claim a credit of it. So you'll get a refund of this additional taxes you have paid to the government after filing return of income, and when it is processed. So generally the refund amount is given to you within a couple of days after filing of return of income. But yes, your money is stuck at least for 6-7 months from the beginning of the next financial year.
Sure. Thank you so much.
All right. All right. So I have addressed the question number 2, question number 3, and now the question number 4, interest on housing loan. So interest on housing loan, so you can claim a deduction for interest you are paying on any housing loan which you have taken to buy your own house. So you can claim a deduction of rupees 2 lakh rupees, provided you complete the purchase or construction of the house within 5 years from the end of the financial year in which the amount is borrowed. and you can claim the deduction, full deduction of 2 lakh rupees for purchase and for construction. If you have taken this loan for repair, renovation or reconstruction, the deduction would be just 30,000 rupees. So that's point number one. There is another point that you have taken a loan, but you got the delivery possession of your house after few years. So in that situation, your interest during the pre-construction period would be allowed a deduction in 5 equal installments, right? So you can read more about interest on housing loan. So that's pretty simple. And so you may have got another question that I have 2 houses and I have taken housing loan on both the houses. Yes, you can claim the deduction for interest on both the houses, but the upper limit would remain same. That is 2 lakh rupees, right? But if you have rented out a property, then you can claim the full deduction of the entire interest amount. And for the second house, the deduction limit would be 2 lakh rupees, right? So that's my another point. And now moving on to deduction allowed under section 80C. So 80C basically it's an umbrella provision, umbrella section, which has covered multiple investment options wherein you invest and you can claim the deduction towards this amount under section 80C. And what are these amounts? So you can just have an overview. Insurance schemes. So all type of insurance schemes. I'm talking about life insurance schemes, be it endowment or term insurance, or ULIP. You can claim the exemption or deduction for your insurance scheme. All the education expenses. So if you are paying education fees, school fees, tuition fees of your children, you can claim the deduction of all those tuition fees under these sections. Employee Provident Fund, I have already touched upon at the time of salary components. Public Provident Fund. So Public Provident Fund, if you make an investment in Public Provident Fund, you can claim a deduction of it. So one question that may arise here, whether I can claim the deduction only for the investment I made in my name or for my spouse and children as well. Yes, you can include the deduction for the investment made in the name of your spouse and children, provided you make the payment from your own bank account. So that's the biggest mistake which we have seen people make. They claim the deduction but they do not make the payment from their account. So even if insurance is in your name, but you make the payment, you can claim the deduction, not your wife. So just make sure if you want your wife to claim the deduction, then you can transfer money to your wife's account and then she can make the payment for those insurance schemes and or for the tuition fees, right? Public Provident Fund is a Public Provident Fund. Otherwise, I would personally recommend to all you guys that you should make investment in PPF because of basically 2-3 reasons. So the number one is you get 80C deduction. Number two, the return you get on PPF, I think that is 7.7, which is far higher than any other investment option. That is tax-free, number one. That is risk-free. So if you guys fall in 30% tax bracket, so this return would be about 10%, right? So my personal recommendation, so to every client or every person I talk to, I always recommend investing PPF because this falls in EEE category, means exempt at the time of investment, exempt at the time of earning, and exempt at the time of withdrawal, right? So this is, and it also includes QnA Smriti scheme, which we have mentioned in the last. So these are same. PPF is for any Indian citizen as well as resident. So QnA Smriti scheme only for the girl child. So if you have a girl child, you can make an investment of 3 lakh rupees, 1.5 under PPF and 1.5 under Smriti. So QnA Smriti scheme, and the rate of return and the tax treatment would be same. So 1.5 lakh is the limit for PPF and QnA Smriti scheme. Superannuation fund, this is if you make superannuation fund is just like I would say insurance policy. So I'm not going much into the detail. ELSS or mutual funds. So mutual fund can be of multiple types. So you have to be very particular while choosing if you are making investment in the tax-free is 80C eligible mutual funds or not. There are certain mutual funds which do not allow you the deduction for it. So just keep this in your mind. Securities of infra company, these are not so popular, so I'm skipping it. Repayment of housing loan. So if you have taken a housing loan and when you make payment of EMI, it has got 2 components. One is principal repayment and one is the EMI. One is second the interest. Interest is allowed under section 24B, which we have just talked about, and the principal repayment can be allowed deduction under section 80C. Contribution to pension schemes of various insurers they should be eligible for ATC deduction. So there are certain schemes which would not allow you these deductions. So always check, always ask your agent before you choose any pension or insurance scheme. NABARD bonds, not so popular, skipping it. NSC, again, this is small saving small saving schemes. You can read all about small saving schemes from this platform. So these are those small saving schemes. You can go and check the applicable rate of interest. So you can see that. I mentioned 7.6. It's actually 7.4. So I wrongly mentioned 7.6. On PPF 7.1. So QnA 7.6. Right. So these are the small saving schemes. NSC, senior citizen saving scheme, time deposit with post office, so QnA scheme, and the fixed deposit. So these are specific fixed deposit which you have to keep for 5 years. So the tenure, the original tenure of this FD should be 5 years. Only then you can claim the reduction for investment in FDs. So you guys may decide that I don't want to take insurance because my money is stuck. I don't get good returns. So you can choose fixed deposit because the tenure is 5 years. After 5 years, you can withdraw the money, because in insurance schemes, the period is generally larger than more than 7 years. In PPF, it's 15 years. In QnA schemes, again, it's 15 years. So you can also choose fixed deposits if you want to claim the deduction under section 80C. Now moving on to 80D. 80D is the medical insurance deductions you can claim for the insurance premium you pay or for the preventive health checkup. So preventive health checkup, you guys understand. So you can, I'll quickly jump on the table. So this is a table you would be able to understand very quickly. So this is the maximum cap. If your age is below 60 years, you can claim a deduction of 25,000. Age is above 60 years, you can claim a deduction of 50,000. And you can also claim the deduction for the medical insurance premium you pay for your parents. If their age is less than 60 years, 25,000. Age is above 60 years, 50,000. If your father's age is above 60 but mother age is less than 60, still you can avail the deduction of above 50,000 rupees, right? It includes four elements: medical insurance, contribution to CGHS won't be applicable to you, so I'm skipping it. This is basically central government health scheme. Health checkup, so preventive health checkup, if you make payment for this, and this is very common these days. So after 35, we anyways are getting health checkup every year. You can claim a deduction for yourself or your spouse. Family member cover your children, your spouse, and yourself. This is medical expenditure. This is very, very important. You guys should keep this in your account. So you know what happens? Insurance companies do not allow medical insurance coverage to senior citizens. So that's why you see that we have placed a dash in this column, but not in this. So you know what happens? Insurance companies do not allow insurance coverage to senior citizens because of the higher risk involved. So in that case, the 80D section 80D allows you to claim deduction of ₹50,000 for any medical expenditure. You are taking even you are buying medicine for diabetes, BP, or any normal problem. You can claim a deduction of ₹50,000 under section 80D, provided the age of that person should be above 60 and he should not be covered under medical insurance. If that is the case, you are spending money for your parents, you can claim a deduction for under 80D. You just need to make sure that you make the payment of medical insurance by check or by the banking routes, by RTGS, NEFT, UPI. But you can make the payment of health checkup in cash. All the medical expenditure can also be paid in cash, provided the total medical expenditure does not exceed 2 lakh rupees. So guys, just keep this in mind. There is a blanket ban of cash payment of about 2 lakh rupees for any transaction, even for gift. Your father can't make you a gift of about 2 lakh rupees in cash. That's just, I took a detour to highlight this point because this was very relevant. So whatever expenditure you incur for medical treatment, be it in cash or by through check, can be claimed as deduction under section 80D. Another point is 80CCD. So basically 80CCD, this is National Pension Scheme. The total limit for 80C, which we have just discussed, and the 80CCD is 1,50,000 rupees. But there is an additional deduction of 50,000 rupees. So if your employer is making contribution to employer, that won't be covered under this limit. That would be an add-on point. But if you are making a contribution to NPS, just take an example. Let's suppose you have make a contribution of 1 lakh rupees under ATC and 1,50,000 rupees under ATCCD. So in that case, you can claim total deduction of 2 lakh rupees, 1,50,000 rupees, 1 lakh under section ATC and under ATCCD. Again, that would be divided into two parts. 50,000 under ATCCD 1, that is these are one of the section, and under section ATCCD subsection 1B. So it means, in simple words, you can claim a deduction of 2 lakh rupees aggregate deduction under section ATC and ATCCD. So I hope I am not too technical and you guys are with me, you are trying to understand what I am saying. I just need confirmation on this point specifically.
Yeah, this is correct.
All right. So these are the common deductions you can claim, and if any of your family member is suffering from any disability or any employee suffering from any disability, so ATU is allowed deduction under section ATU if taxpayer himself is suffering from disability. So 75,000 rupees and 1,25,000 rupees deduction is allowed. No question asked, you just need a certificate. Again, that certificate is not currently uploaded on the department's website, but it's advisable to take that certificate from medical practitioner, and the government doctors are preferred. Similarly, if you are spending money for your family member who is suffering from disability, you can claim a deduction under section 80DD and 80DDB. So these are the additional deductions you can claim. Right. So one last deduction which is very important. That is
sorry, Naveen. I had a question about this one itself, and I was waiting for it. The thing is, my dad has had 3 brain strokes, and like we've been spending quite a bit of it on his treatment. But since he's being treated at a private hospital right now, this certificate which is there, Form 10U, whatever, which has to be given with respect to the disability. Which you're recommending that it's preferred that we get it from a government doctor. Now, how do I get this? At max I can get it is from like the neurosurgeon at Apollo itself who's been treating him for this.
That's really good point. Sir, you can see that the disability certificate can be issued by the following medical authorities: a civil surgeon, chief medical officer in a government hospital, a neurologist having a degree of MD neurology. So
okay, the same doctor can do it.
Yes.
Okay.
But you can't claim a deduction in section ATU. So you will have to go to, you want to claim deduction for yourself or for your father?
No, for my dad. He's 72, so I'm already paying their insurance. Apart from that, for this as well, I wanted to see if we could get it because the insurance itself covers just half the amount.
So Dipen, can I request you one thing? So I don't want to interrupt this discussion. Can you quickly check if he's eligible to claim deduction in section 80DD or 80DDB for the medical treatment of his father if that disability is covered under these two sections?
Okay, sir, let me check.
So we'll check and we'll get back to you because this is a case-specific issue. So maybe by end of this webinar, I'll answer your query. So another one is 80DDA and 80DDB. Again, you guys need to consider this while filing a return of income. So 80DDA is allowed very simple bifurcation. So you can see that senior citizen 80DDB, any other individual 80DDA. So under 80DDA, you can claim a deduction of 10,000 rupees towards your interest on saving bank account. And 80DDB is allowed to senior citizens for any interest income from any bank or post office. So in simple words, up to 10,000 rupees of interest income on your saving deposit can be claimed as deduction under section 80DDA. And for your parents, if they have some FDs or any kind of interest income they have earned, can be claimed as deduction up to rupees 50,000 rupees. I hope that is clear. So I have explained all the important tax deductions just now. So now moving on to the another one is, I have touched upon point number 5. Point number 6, I'll I'll take care at the end if I still have some time. I think time I have already taken. I was allowed 45 minutes. I'll just quickly explain medical insurance I have discussed. So alternate taxation I will discuss. So the last one is high value transactions. So guys, you just need to understand a concept of statement of financial transaction. So this is very, very important for you. What this says, if you're getting into any financial transaction, the department knows about all your financial transaction and the government gets the information about all your transaction from the parties who are recording your transaction. Just take an example. You're buying a property, then the sub-registrar is responsible to record the transaction. So the sub-registrar will inform the tax authorities that this XYG guy has purchased this property and that would be reflected in your SFT. So you can see that, so we have 6 transactions in cash transactions. So there are limit, even there are limit on the amount you can deposit in your bank account, your credit card transactions, your investment, you are buying shares, investing in IPOs or mutual funds or buyback of shares, foreign currency transactions. So these are, so if I go to investments, I'll specifically highlight this. Purchase or sale by any person of immovable property. If the transaction value of the valuation by the stamp valuation authority is rupees 30 lakh or more, that would be, that information would be given by a sub-registrar to the Government of India, to the Income Tax Department, and that would be reflected in your SFT. So this is simply you can go to SFT, and so before getting into any transaction, I am assuming you all guys are very honest and not doing anything, any of their stuff. Still, you want to do that, just have a look and keep your transaction limit below this amount so that your transactions are not reported in SFT. And the last one is the cash transactions, which I have already touched upon. Still, if you guys want to understand about it, so this is 269 ST. So it puts a blanket ban of 2 lakh rupees on any transaction. Any transaction means in aggregate from a person in a day, in respect of a single transaction, in respect of transaction relating to one event or occasion from the person. If I explain each transaction one by one, so let's suppose you have purchased jewelry of 5 lakh rupees, right? So now you can't make the payment about 2 lakh rupees in cash. So you can make a payment of 3 lakh 1,000 rupees by check and 1 lakh 99,000 rupees in cash. But you can't even split your total payment in multiple tranches, that I make a payment of 1 lakh rupees every day for next 5 days. You can't do that. So there is a family function in your house, and you have hired an event manager. Now he would be handling all the decoration or the catering, and his total amount is, let's suppose, 10 lakh rupees. So since he would be paying payment to multiple persons, subcontractors later on, even in that situation, you can't make the payment in cash. So if you do that, the amount, again, that won't be any penalty on you. That would be the penalty on the recipient. If that is the case, the amount of cash involved would be levied as penalty. The equal amount of penalty would be levied on the recipient. So I have completed my discussion in 45 minutes. If you guys are interested to know more about the taxation of cryptocurrencies and shares of mutual funds, and if I get another 10 minutes, I'll touch upon all these 2 points very quickly and very brief. So Praveen, I need your interference.
Yeah, Naveen, I think we can wrap up the session for now, and we'll try to share more information through email if possible, and we'll also there are some questions participants have, so in later on I'll email it to you. So this was overall a nice show. Thank you so much, Naveen. I think Ansh, if Ansh is here.
Hi, Praveen.
Yeah, Ansh. So I would want so Ansh is also from Taxmann. He's my connect at Taxmann at this moment. So Ansh, the floor is yours. Probably if we can just wrap up the session in a minute or two.
No, I mean, I'm just gonna because I think we've already gone quite a bit, so I'm just not gonna hold up everyone. Thank you, Praveen. Thank you so much for the entire session, and I hope Naveen was pretty helpful with all his insights which he can, I'm sure, go on and on for the next 2-3 hours. And it's very good to see Kabir. He's my batchmate from my law school. So it's good to hear from him.
Thank you so much. And thanks everyone.
Praveen, from that query, can you connect with me, your
Yes.
colleague? We can address his query, or Dipen, if you can answer it quickly.
Yes, I checked. Actually, if the amount is incurred for the neurological disease, then the deduction is allowed under Section 80 DDB. Otherwise, the deduction is available under Section 80 D. If the amount is incurred for the disabled.
Sure. Thank you. And I see Ansh there. Ansh and I went to law school together.
Yep.
How have you been? Good seeing you.
Likewise.
Thank you, guys.
thank you everyone. It was interesting. Thank you, Naveen. The session was really good. And I hope, Kabir can, I think it was nice meeting both of you together, and we can catch up later. Thanks everyone.
Perfect. Thank you.
Thank you.